But I think the key thing to think about board packs is you're always in sell mode. You're always selling.
Today we're talking about what you need to consider when you're creating a board pack and presenting it to your stakeholders. We spoke super high level about the structure of the board pack and what it should look like, as well as really in depth on how to incorporate storytelling and what to do when perhaps your metrics aren't looking as green as you'd like. We're honoured to have Ankush on the podcast, who is a commercially focused finance leader with over 15 years of experience across London and New York businesses as a CFO, both private equity and venture-backed. He started his career in investment banking and brings the right balance between having an analytical mind as well as a really creative problem-solving outlook. I'm Anshika. I'm the founder of Eternity, a CRM designed to streamline the wedding industry for couples and businesses alike. And I'm so excited to be hosting the Bay Lab Host podcast today, which is powered by HSBC Innovation Banking. Let's get into it. Thank you so much, Ankush, for joining us on today's episode of the Bay Lab podcast. I'm so excited to have you on and talk all things around building a board pack. So let's get straight into it. To start off with, what is the main purpose of a board pack and how can it really set the tone for a productive board meeting?
Yeah, so fundamentally, the purpose of a board pack is to inform the existing investors about what's going on in the business. They have information rights. They have a right to know how the business is progressing. But I think the key thing to think about board packs is you're always in sell mode. You're always selling, because remember, these are existing investors who might come on the follow-on round, and if they don't follow on, the new ones are probably going to be like, why aren't they coming in? And also a big thing that people don't realize is it's very common in DD that future investors ask for the board packs from the last 6 to 9 months. So, it's important to make sure that the board pack is structured in a way that, you're always in sell mode, things are progressing. But also it's not about just being positive. It's okay to put your challenges in there, get the feedback, also decision making. It's a way to get formal decisions made.
Absolutely. And at Bay, we love tangible takeaways. So I know a lot of founders out there listening are probably wondering, right, well, Ankush, what should the structure actually be? You're saying I should focus on the wins as well as what maybe could have gone better. But what would you suggest as a structure of a board pack?
Yeah. So I think it's a really good practice. Usually in boards I've sat, the chairman opens up with an opening note. And I think the number one next thing to follow is the list of follow-up items from the last board meeting. I think it shows the board that you're actually followed up on what they asked. You have a plan in there, or you have a timeline for when it can be done. And then the format usually should be executive summary. That's the CEO. He's talking about the overall business, what's going right, what's going wrong, touching on different aspects, followed by performance. This is usually where the CFO comes in. And I mean performance across the business. So this can be key metrics on the financial side. It can be metrics on the marketing, on the ops side, on product, but overall a view about how the business is progressing, are the unit economics getting better? And then I think after that, it's usually a mix of if there are any strategic things you want to do, whether it's launching a new geography, a new product. And in boards I've seen, after that, it's a such combination of between marketing, ops, product, rotating, not all of them at once, maybe one of them, a particular topic. And you end with the financials, but the financials is usually a check mark. You have the P&L, the cash flow, so you know that the checks and balances are in place, but the punchy metrics are always at the front.
Yeah, amazing. And I love how you've positioned it, because essentially you're telling a story. And I think that's a really important thing. And we always hear that your board packs should be a storytelling piece. How can we really use that to drive meaningful discussions? Because the people that you have in the room, on the cap table or on the board, obviously you've wanted them on board for a reason, and it needs to be a two-way conversation. And often it's a great time to use those meetings to get exactly what you want out of those people. What's the best advice that you would give to drive meaningful discussions through that board pack?
Yeah, I think in my experience, and I think of myself primarily as an operator, as opposed to a CFO, as a co-pilot to the CEO who's going to come in with him and build a business. And I think for founders, if they don't have that, what they should be doing is sitting with the investors when new investors come on board and ask them in the first 3 months, okay, what are the top 6, 7 key metrics you care about? What is it that's going to make you follow on in the next round and something you want us to track? Because I think it's important. Otherwise, people get caught up in 15, 20 metrics, and then you really can't show improvement on anything and you end up going nowhere. So having that core list of 6, 7 metrics and then rigorously tracking them, showing improvements in them over time, whether it's on a quarterly basis, I think it builds confidence with the board. The storytelling, they know you're following a path. And then I think the other thing is also, about new things. I've worked in businesses where, things have not gone well in the current market because of macro conditions at place. But a lot about building a startup is about resilience and perseverance. And we have come in with an alternate plan and said, look, this didn't work, but we have an idea for this new product, or there is this acquisition that we could do that could like get us back on track. So I think it's always about the storytelling, the good and the bad is followed by like, what's our plan now?
I love that, because I think especially a lot of founders, you're not always going to have a great day. There's going to be some days where something doesn't go right. There's going to be days where you underperform on those metrics. And by the way, I absolutely love that trick around asking your investors and your cap table and your board, which metrics do they actually care about? Because I think to build that relationship, you don't just want information jargon thrown their way. You actually want to make it very tangible and meaningful. So I think that's a really helpful piece of advice.
Yeah, and
But when it comes, sorry, go.
sorry, I was just going to add to that. And there is a fine balance here that especially happens when you jump from seed to Series A, because you're suddenly going from high net worth individuals who might have come in the seed, and you're getting into Series A where you're getting like proper VCs coming on board. And there can be a difference out here because a lot of the guys on the high net worth side can be focused on profitability. And the guys coming in next can actually be focused on like, well, I want growth. And that's why I think it's very useful to get that consensus in the room to about what are we going to focus on. It also gets everyone on the same page.
Actually, that's a really interesting a question that I have based off of what you've just said. A lot of the time as founders, you will have your existing investors, and then you'll have those that you're trying to warm up for future rounds. So they always say the best time to actually meet those people and future investors and when you're not fundraising, and build up those relationships organically. But how much do you think it's worth asking those warm leads and potential future investors about what metrics are important to them and implementing them in present board packs? Do you think that that's spreading yourself too thin? Do you think it's something which could be useful? I'm just so interested to hear your thoughts on that.
Yeah, no, that's a really good point actually. And actually, honestly, that's the way it's worked for like us, like in most of the three startups I've worked at, startup scale ups. We have like started talking to people like 12 months before we wanted to raise a round. We have gone to them, we have showed them our deck, we have actually said like, look, this is what we have done. Is there something that we are missing? Is there something we're not thinking about? And sometimes it throws like great ideas out there. They're like, well, can you think about this as well? And then you're like, okay, if it makes sense, you can take it back to the board and be like, okay, we have a little bit of input out here and I think this is important. We should incorporate it. It's usually not miles out. Like it's not like in the sense that you have completely missed a key metric, but it's probably more variations about like how people like to think about it. I think it's a really, really good idea. Getting someone on board in 6 months when you want to close a round is very tough. Getting them on the journey, they already know the management, they already know how the business is progressing, makes it super easy.
Yeah, absolutely. And I think one of the podcasts that we recently did, we actually spoke about the importance of stakeholder updates each month, and even just adding people to that mailing list, even if you've just met them for a coffee or you've just met them for a networking event, but you think they'd be a good contact, because the amount that you could then generate interest by them just reading that email once a month from you, it's so much warmer. And it's definitely something that I found beneficial in my own business. And I think
absolutely. And founders shouldn't be shy to share good news. It's good to get people excited. I mean, you're always in sale mode, so definitely.
Pretty much. And going from good news, on the other side of the spectrum, when there's bad news, I know you touched upon this briefly, that when you're perhaps underperforming or something's not going right, I'd like to hone in a little bit more on that, because I think that's the most daunting thing for founders, is to send that update when you know that it's been a slow month or a slow few months. And how do you keep the morale high and still keep the motivation going and make sure that your board or your cap table don't actually lose interest or lose sight of what you're building?
Yeah, absolutely. So I always say this, there is a board meeting, and then there's a real board meeting, and then there is the board meeting. I think if there's bad news, it should not be the first time they're hearing about it in the board. That is just going to be disastrous. Imagine having 5-6 people around the room and all of them are hearing about it for the first time. That can never go good for anyone. You need to convey that message in before the board meeting. You need to have those individual conversations with the investors, explain to them what's happening, and more importantly, have a plan in place about like, okay, we've recognized this, we understand what's happening, we're working on this right now. Give us some time, next board meeting, or we can have an update in a month and we'll come back and report on this. And I've not worked in a single business where things have not gone wrong. They always do, but it's more about managing it. I think the one thing investors hate is when they ask a question and management has no clue. Like, they don't want to be the one pointing out that, have you thought about this? Like, this seems completely off and management has no clue what they're talking about. That is a disaster. So I think bad news is okay, but it's all about managing it and having a plan in place. You know, that's key.
We hope you're enjoying the episode so far. We just want to give a quick shout out to our headline partners, HSBC Innovation Banking. One of the biggest challenges for so many startups is finding the right bank to support them. Because you might start off and try to use a traditional bank, but they don't understand what you're doing. You're just talking to an AI assistant, or you're talking to somebody who doesn't really understand what it is you're even trying to do. HSBC have got the team they've built out over years to make sure they understand what you're doing, they've got the deep sector expertise, and they can help connect you with the right people to make your dreams come true. So if you want to learn more, check out hsbcinnovationbanking.com.
Absolutely. And I know that we touched briefly around financial metrics. I want to talk a little bit more on that. And I know you said that they belong near the end of the pack just to make sure that everything's in check. Other than the, say, P&L cash flows, are there any other key financial metrics that you think every business should have? I know that it does vary based on the model that you're using, but any high-level metrics?
Yeah, absolutely. So I've worked a lot across like B2C, e-commerce, marketplaces, fintech, consumer lending businesses. But I've also been an M&A banker, so I've done a bit of buy and build. So quite spread out. But I think just looking at that theme, so the financials, the core financials, at the back, P&L cash flow, but year on year, month on month comparisons showing where the shifts are, that's more a checks and balances. That makes investors happy that the finance department knows what they're doing. They can see what they want. The front should be punchy. And this is like more your ARR, your MRR, your gross subscriptions, your net subscriptions, where your churn is, your retention cohorts, your LTV, your CAC. And then, you can talk a little bit more about like your gross margins, your fraud rate, depending on where the numbers are. Those are, I think, the punchy numbers that businesses care about because they kind of revolve around the unit economics and eventually what you're going to be valued at. And there is a mix out here because some of these things like LTV CAC, like if you look at the ROI, you're not going to change it month on month. Like you can't make such big shifts that the LTV just moves. So this comes with a bit of a plan. And you're like, okay, you know what? I understand that the board wants this to go towards profitability. What are the biggest drivers I can do that? Okay, I think I can improve my gross margins, but I need 3 months. So let's work on a plan to do that. Let's work with our suppliers, delivery guys, cut those costs down, and then show what we can do. So I think that's where I think investors get really love that kind of stuff. I think it also helps to I came from an investment banking background. So, I've always been quite happy to show it in charts and tables and numbers, very visual, not just like things written down. So it's very visual. It tells a story. And I believe in the hockey stick. So, things are like looking good. They're improving. Yeah.
Amazing. And I love how you've mentioned there that even through your finances, you can do the storytelling piece. So this is where we currently are. This is what we want to implement. This is where we want to be. And I think that's a really important piece that numbers by themselves just aren't probably enough. When it comes to non-financial metrics, are there any other ones that you see in great board packs that you've looked at, which founders should implement?
Yeah, absolutely. I mean, on the marketing side, again, my background has been in a lot of B2C businesses. So on the marketing side, these are rich with marketing data, conversion rates, cost per clicks, the CACs across different channels, referral rates, because e-commerce businesses, get fueled on marketing and how it is. And there is actually a lot of things out here because, nowadays you have quite a bit of brand building with media for equity, etc., which can help as well. On the other side, I think on the operational side, there's quite a bit as well around operational efficiency. So I worked in a kids bike subscription business. So it's quite critical for us to know what's our total fleet size, how many of the bikes are out with customers, what's the operational efficiency, how soon do they come back and go out? Because every extra day they're sitting in our warehouse is them not earning money. So while it's a very ops focused metric, it drives finance, kind of we were very involved because it drives my revenue, my P&L, how many bikes I need to buy. So I do think at the end of the day, that's why finance is such a cool place because it kind of tells you the story across the business. Numbers tell you what's going on throughout the business.
Absolutely. It's the foundation, isn't it? And I guess just to close off, what are some of the most common mistakes that you see founders making when they create their board packs?
Yeah, absolutely. So I think the number one thing is to probably overpromise and build too ambitious a plan. I mean, this is something that goes wrong many, many times because, in the start, I mean, see, everyone has a plan. Then everyone reforecast a plan when investors are on board and talks about like realistically, what are we going to do? But I think it's important to get that plan right because you're held to it. One, investors love to do a budget versus forecast comparison. And again, going back to my DD plan, your debt investors, your equity investors coming in, they all want to see how you performed against your budget. So I think it's important to balance like ambition with what's realistic. You can't have too boring a plan because it doesn't show ambition. It's not, and actually that's something as a CFO I do a lot. When marketing and other people come in and say that's a plan, and if it's not ambitious, I'm good to raise up my hand and say like, well, that doesn't make sense. How people gonna invest in us? So that is the number one thing. The other things are a bit smaller. It's a bit about clarity of structure, not having the right ask in there. Remember, board meetings are a great way to get decision making, get everyone on the same page and get your approvals. So not having any of that missed out, I think is an opportunity gone south.
Yeah, absolutely. No, I love that. It really is bringing everyone together in conjunction and hearing the right opinions to make sure that there's that fine balance between overambitious or way too cautious. Absolutely love that. Thank you so much, Ankush. I've learned so much through this, and I'm sure anyone else listening definitely has as well. As you know, with Bay, we always round off with the same 3 questions that we ask everyone, which are probably arguably a bit more difficult to answer. So to start off with, who are 3 Asians in Britain that you think are doing incredible pieces of work that the audience should check out?
Yeah, sure. So I think my first shout out should go to Vinay Solanki. He's actually the head of Channel 4 Ventures. He's a really, really great guy to know. Like, I know him because he invested in Hustle while I was there. But since then, like, he is a super friendly guy. If you're in a consumer space and you want to build your brand, I think Channel 4 Ventures is a great way. They do media for equity, great way to scale without using your cash. And Vinay generally is very smart and super helpful guy. I don't think I've seen a friendlier VC. So that's one. The second one is actually Farah Kabir. She is the CEO and founder of Hank's Condoms. So she was building the first vegan condoms. It's quite funny, actually. We both entered the startup world around the same time. I mean, we're both ex-Goldman, but worked in different departments. And, I remember when she was initially talking about it, I was like, well, this is a space that has Durex and Trojan. When you're going to go against some heavyweights. But, she's been resilient, perseverant, and she's built a great brand. And now it's gone more than that. It's into wellness and intimacy for women, and it's gone to the US. So definitely doing a great job. And then I think the third one is Arnie. His last name is a bit of a tongue twister. Arnie Stris Kandaraja. So I think I've murdered that name. But Arnie is someone I know. Actually, he introduced me to my first role at Seracare. And his day job is he's the head of alternative strategies at Roundhill Capital, but he also runs quite a few things for early stage founders on the side. So he runs a group of 30 operators and VCs called Ground Floor Ventures, which invest out of our own money in early stage startups, mostly pre-seed. And he's a great guy to know. I mean, the people on that list are like VCs from like almost a lot of the big funds in London, and they're all investing out of their own money. So you kind of like get access to them at quite an early stage, and you get the input too.
Amazing. Definitely check them out. Thank you so much. How can people find out more about you?
Yeah, so the best way is my LinkedIn. I'm quite responsive out there. I think my LinkedIn has a good summary of my experience. So I think that's probably the best way.
Amazing. And how can our audience help you?
Yeah. So, I love working with new companies. I think I really thrive on like working with early stage and up to Series B, C stage companies. If there are founders out there who need help with fundraising, investor decks, or even like Series A, B founders who probably want like a CFO, but don't like want a full-time one yet, but someone who comes in and commercializes their function, helps them think a lot more on metrics and KPIs, definitely feel free to reach out to me on LinkedIn.
Amazing. Any final words from you?
No, thank you so much. I mean, it's been great. I've been following you guys and your podcast, so really excited to be part of it.
Amazing. Thank you so much. It was great having you on.
Thank you so much.
Thank you for watching. Don't forget to subscribe. See you next time.